Is Oklo an AI power winner or nuclear hype? Oklo is one of those stocks where the story is almost too perfect. AI data centers need power, nuclear energy is back in the conversation, and investors are looking for the next infrastructure winner. But the hard part is this: Oklo still has no commercial revenue yet. By the end of this video, you'll know why the stock is getting attention, what the Q1 2026 numbers actually show, and why valuation is so difficult right now. This is not financial advice, it is a research breakdown. The short version is this: huge story, not a clean business yet. So what does Oklo actually do? Oklo is trying to build advanced nuclear powerhouses and sell power or heat through long-term arrangements. Instead of just selling equipment, the bigger idea is to build, own and operate energy assets. That can be powerful if it works, because reliable power is becoming more valuable as AI infrastructure expands. What do the latest numbers say? The latest quarter is Q1 2026. The most important number is that Oklo still has no meaningful commercial revenue yet. That does not make the company worthless, but it means normal valuation tools are weak. Q1 net loss was 33 million, EPS was negative $0.19, operating cash flow was negative $17.9 million, capex was $32.8 million, and free cash flow was roughly negative $50.7 million. On the positive side, liquidity was about $2.54 billion, including $1.59 billion of cash plus marketable securities. Liabilities were only about $64.9 million. So what is the market already pricing in? At the price used for this analysis, Oklo was around $73.63. The market cap is about $12.8 billion, and enterprise value is about $10.6 billion. That is a large valuation for a company without meaningful commercial revenue. Where does Oklo score well and where does it fail? So my FinanceToGo score is 4.7 out of 10. Story strength is high because AI power demand and nuclear energy are both real themes. Balance sheet score is also strong because liquidity is large compared with liabilities. The weak areas are profitability, cash flow, and valuation. There's no meaningful commercial profit yet. Free cash flow is negative, and the valuation already assumes major success. What exactly is the bull case? The bull case is that AI power demand keeps growing and nuclear becomes a more important solution. If Oklo can get approvals, secure fuel, build projects, and convert customer interest into real contracts, this could eventually become a valuable infrastructure platform. What exactly is the bear case? The bear case is that investors are paying too much before the proof arrives. Nuclear projects can face regulatory delays, construction delays, fuel challenges, and cost overruns. Even if the technology works, the timeline can be longer than investors expect. My FinanceToGo verdict is worth researching, but speculative and not clean yet. Oklo goes in the speculative watchlist bucket. The story is huge. The numbers are early. The valuation requires quite a lot of future proof. I would watch regulatory milestones and customer agreements, cash burn versus the liquidity case, commercial revenue timing, fuel progress, and any dilution. If those improve, the bull case gets stronger. If they slip, the current valuation becomes harder to defend. If you want stock breakdowns that separate hype from numbers, subscribe to FinanceToGo. Also, tell me in the comments, would you put Oklo on a research watch list, or is it way too speculative at this price? And again, this is educational content only, not financial advice.